Hello, good people. This is Larry Jones with Stock Up. Today, we're going to show you some facts about why you should be saving money and how to invest going forward. The stock market is crashing. Stimulus, no deal yet, and a contentious presidential debate. You're going to want to watch this one. Before we start, hey, you know what to do. If you're new here, smack that subscribe button, like my granddaughter said, and give me a like. When you press that like, it helps me to stay alive. It keeps me relevant, okay? So let's get right into this information. Okay, so I am going to boldly tell you at the beginning of this video, this week during this presidential election, during this season, I'm going to boldly tell you to hold your cash up, cash up. It's too volatile to try to make any short-term plays. Forget about that. It's not time for trading. It's time for investing. And I'm going to prove to you and show you why. But having said all of that, there is a lot of money to be made because we are shifting, getting ready for next year. But remember, the stock market always looks forward to the future. It's not operating in real time like you and I are. And so that's why I learned from a billionaire earlier this year. Just before COVID started, I was with a billionaire, a gentleman that has 14,000 employees and is worth $5 billion. And when I get those opportunities, I ask the questions. And he told me concerning COVID, because the cases had already started, and we were at the end of February, beginning of March. And he told me some things about the stock market, and he was absolutely right. Okay, so I got a short video. I want you to listen to this from CNBC, and it's going to give us a peek back and look at what happens during presidential elections and contentious presidential elections and how the stock market reacts to it. Okay, check this out.
States, when you can't be certain who will be the president of the United States, what party will be in control, then you're going to have some elevated volatility.
The market typically slows a little leading up to an election and reacts more positively in the short term when a Republican president is elected. Remember though, only 52% of American families are invested in the market. Long-term policy has a bigger impact on the economy than market performance. The economy has historically performed better under a Democratic president. The GDP grew 1.6 times faster on average, and private sector job growth was nearly 2.5 times faster on average under the Democrats. But the election can be an important element for those looking to earn big in the market. So how does the US election impact the stock market? And how can investors prepare? Across the last 7 presidential election cycles, average gains for major indexes like the S&P 500 and Dow Jones showed positive returns in the 6 months before Election Day. The only exception being the 2008 financial crisis that rocked the stock market right ahead of November. Despite the concerns over market volatility following the market performance in September, experts reassure that volatility is just something to be expected at this time of year.
Typically, market volatility, or at least volatility implied by the options market, will be elevated ahead of an election and generally resolved following an election if an election result is indeed conclusive. In current situation, we might worry that the resolution of ultimate uncertainty is going to take some time if the election is close or contested.
The bright side of that for investors is that most of that volatility can usually set up some pretty good buying opportunities, because what will happen? The markets will adapt. The market will just get used to whatever the new circumstances are, and it will continue to go higher.
What did we learn from that short clip? Number one, the stock market does not like uncertainty. The stock market will always adjust to who's the president after a short period of time. But what the stock market does not like is uncertainty, right? Uncertainty is just not, okay, I'm going to just say, you invite your crazy uncle, your drunk uncle to Thanksgiving, right? When you first see it, you're a kid and you first see your drunk uncle, you going, what the heck? You don't know where he's coming from, right? But after a while, that's drunk Uncle Bill. Sorry if your name is Bill out there. If he's going off, he starts going through the changes, he's drunk. You get used to it after a while. The stock market does the same thing, right? I got another short clip I want to play you and we're going to discuss after that.
JP Morgan also discovered that in the short term, markets tend to react more positively right after the election of a Republican president, possibly due to the preconception that Republican policies are more market-friendly.
Especially when an election was close, a surprise or kind of near surprise outcome where a Republican president is elected corresponded to a positive market reaction, and a surprise or kind of close election result in favor of a Democratic candidate produced a negative market reaction.
However, in the long term, it's a different story.
If we look at the entire presidencies, the stock market performs on average much better during Democratic presidencies than the Republican ones. So the bulk of returns, positive returns in the market actually are earned during Democratic presidency.
So as you can see, the stock market reacts more positively directly after the election if it's a Republican president, right? This is very important for you to know. But it actually reacts better long term and performs much better during a Democrat a Democrat president, right? So the stock market can adjust either way. Remember, we're not about politics here. We're about being smart and making money, right? So let's just call it like it is. If President Trump get reelected, the stock market is going to react positively. This is what this data suggests, right? No one knows exactly what's going to happen, but all we could do is go off of the data. So if President Trump gets reelected, those of you keep the political comments. This is about money. Then the stock market will probably perform better shortly after the election, right? And if Mr. Vice President Joe Biden gets elected, then the stock market will be volatile right after. But long term, it will adjust, adapt, and react positively. So the stock market will continue to live on regardless. It just don't like your crazy uncle. That's all. All right, I got another short video, and then we're going to discuss after that.
I think as an investor during a time like this, you want to make sure you've got your bases covered. So it really is some of the old time diversity, those kind of things.
Remember, any timing decision when it comes to investments really means you can make two good calls. You know when to get out and you know when to get back in. And I've never met anybody who can consistently make one good call on that. So I would think that the right thing to do is think about where you want to go in the long run. What are you trying to do with the portfolio? Think about valuations and place your bets accordingly. And try not to try and time investments around an election.
So we should be what? Diversified. If you got stock in the market right now, you should be diversified. Stay diversified. Don't have all your money in one sector. But the biggest thing that we've learned from all of these videos is what? You should be investing and not trading right now. You should be looking for long-term, high-growth stock right now, not short pops. You're going to get popped. You're going to get caught holding the bag if you're trying to time the market. No one can time the market. So we should be looking long. We should be investing long. And that's what the billionaire told me. Don't ask me his name. I'm not going to say it. I've met him 5 different times at the same event. And but I will just tell you that he knows the market, right? And I will tell you this. If you do short-term trading over a period of 5 years or 10 years, and you do smart investing over the same period, so two different guys, the guy that does the investing will win every time. He's going to outperform. The numbers show you investing. So I always encourage you guys to do the short-term pops, but also invest. I do it all the time, people. I do it all the time. I made money. I made money in the food industry with Darden Foods and Cheesecake Factory and all of those. So what happens is every time COVID goes up, those go down in price. And I always get in when they're down. Remember, be courageous when others are fearful, and be fearful when others are courageous. So I always buy them when they're pushed down. Then when the states were opening up, I actually sold. So I made good money 4 different times moving out of these food stocks, guys. We have to be wise investors, but that's only a portion of how I invest. Those are short swing trades, right? But I'm also investing long term. And those of you that are new to the game, you know, they coined you guys the new Robin Hooders. This information that you're getting right now is going to make you money over the next 3, 5, 10 years, and a lot more money. So I know a lot of people don't make investing sexy, but this is how you make money in this game, right? So how about the stock? I'm going to try to do one stock every day and to go into it. So I had to show you guys this first. And so now I can go into the stock. So because we have to phrase the environment in which we are trading, right? So the very first stock I'm going to suggest, and remember, I am suggesting not as your financial advisor, but I'm suggesting as Larry and what I would do. You should always do your own research and consult with your financial advisor, to which I am not. But I'm showing you what I'm going to do. And if you want to continue to watch what I'm going to do, then hit that subscribe button and the notification bell. All right? Because there's a lot to learn and a lot of money to be made. All right. So let's go to the stock pick of the day. And that stock pick will be ARK Investments. So for those of you that don't know, ARK Investments is I'm looking at ARKK. ARKK is an ETF. I'm not going to go into what an ETF is, Google it. But it is one stock that houses a bunch of stocks. So this one stock can house 24, 25 stock within it. There's ETFs that have 50, 100, 200 stock within it. And you could get ETFs that are in specific sectors like oil, real estate ETFs. But this one is all about tech and futuristic tech. It's actively traded. And the CEO is Kathy Woods, who I think is a younger female version of Warren Buffett. I do. She's a brilliant lady, and she's very smart. So I'm giving you a peek inside it, and you can Google it. But as you could see, it has things like Tesla, Square, CRISPR Therapeutics, Zillow, and you might think that these why Zillow? Because what these companies are doing with technology. They got gene therapy that are, let's say the grandmother has cancer and then the mother has cancer. They're looking to, down the road, be able to alter the genes so that the granddaughter doesn't have cancer. So this is technology at its best. And she's not locked into these stock. She could drop Tesla and go with NEO or Lordstown, or Workhorse. And so that's what I like about this. It is actively managed, right? And look at here. She got Tesla in 2014. In 2014, Tesla, you could have bought Tesla for like $30. But she was smart enough to get into it at an early time. When everybody else was bearish, she was bullish. And that's what I like. So these are the company that's going to give you, these are high yield companies that will give you a good return on your money. So check this out. Let's go to how it performed over the last 5 years. It's a young ETF, so you won't be able to go out 10 years, right? So let's look at it. So in 2015, it yielded 3.76%. 2016, you lost almost 2%, negative 196. But look at what happened in 2017, 87.38%, right? Then 2018 wasn't so hot, 3.58%. 2019, 35%. And of course, 2020, the numbers are not in yet. But let's look at year to date. Year to date, it's already at 83.32%. So before we add the 83%, right, we're looking at a 5-year yield of 39.44%. You're talking about a lot of money. 39.44%. We could by the end of this year, we could easily say that this will probably be around 45, 50%. But let's just say 40%. You're not going to beat that swing trading. It's not going to happen. But unless you just got a crystal ball somewhere. So you're not going to beat that over a 5, 10-year period, 3-year period. So now is the time to be investing long. But I'm going to caution you, do not, D-O-N-O-T, go out and buy ARK investment, ARKK, right now. Look at what the market is doing today. Now is the time to cash up, get ready. And me personally, I'm waiting until after the election, and then I'm waiting on after the election. The time it's going to take for them to tally up who is the actual president. And that's why this year is so contentious, because we do not know who's going to be the winner the night of. We don't think we are. The night of, we may not know. This may take some time, all right? So I don't want to ramble on. For those of you that haven't subscribed, boom, hit the like button, hit the subscribe button, and then hit that notification bell. This is Uncle Larry with Stock Up. Listen, come back here every day this week. I'm going to try to give you a new stock every day to just cash up. Right now, if you want to go back and rewind this and look at some of those interviews, take a pen and paper out and write some stuff down and be a savvy investor, right? Bless you guys. Love you. Live, love, laugh, and learn.